eat for my dinner. And then, let's see where we ended. So we ended the day almost, well, within a dollar of the market maker's expected move for the day to the upside. And just under Vega neutral. We did break out above it briefly, but we were unable to hold. Um, we may see Vega neutral move up a little with the short vol from yesterday largely falling off today, but it probably won't move up very much. And I suspect that Gamma Max may move closer to spot if bulls are continuing to position to the upside on short dated contracts. Remember that a rejection in this range between Vega neutral and Gamma Max can be very sharp. Um, this is generally where you get profit taking and on the future side. The MM starts to dump their delta hedge. And you get that cover bid kind of flowing the other way. And so you can get a large move down. Um, I would say if we stay under VN for most of tomorrow, that we could get a fairly flat close into the end of the week. But if we move up above it, we may see like an intraday into end of day rejection. There would still be strength on the back half of this week, so technically moving forward, we should expect a bullish continuation here, and we would look to the back half of next week for a potential reversal. Going long mini VX December. Ooh, okay, interesting. Robert F. Kennedy Jr.'s new health roll is going to make us all super ripped. Nice, clean, beautiful, healthy food for all. Yeah, and corporations allowed to sell us poison and market it as whatever the fuck they want. That'll be great. Brainworms is totally going to do a good job. I'm sure of it. He's probably not going to be given any power at all because he's a fucking insane person. Looks like we tested the top of the trend here on ES. This is the long-term trend. It's more out here on like the 1 hour, even the daily. So this is, the long-term ES trend from, back in August of 2022. We tested it once in July, right before our like 10% correction. We're testing it again here. A little bit to the upside of us is that, 1929 trend, not very far away from spot, that marked the top of both the roaring 20s and the top of the dot-com bubble. Um, I don't know if that has any really big significance outside of people's perception of it, but we it is kind of ironically also around the price where we run out of money to keep pumping things. So unless we start to hit bank reserves really heavily, and the only way to do that is to see a really significant amount of selling and marking to market of securities at a loss, which I don't think we're gonna see too much of until yields go higher. Overnight pullback unlikely. No, I mean we do have a little bit of a rejection here on the 1 hour. I don't think it would pull back very much. Maybe like 59.85. We have data tomorrow too. Um, I'm pretty sure we have Michigan consumer preliminaries, which are, arguably the most important Michigan consumer print. We have a little bit of shit out of Japan tonight. I think like foreign bond investment and stock investment by foreigners, um, which I would expect would rise, and foreign bond investment is probably going to will also print higher. China's got their National People's Congress still ongoing. Some ECB speakers in the morning. Not too much data. But we do have Michigan consumer. And we are kind of, not sitting on a ton of support up here. But I think it's possible we push up to like the 60-25 test before failing, which would be roughly a test of 6,000 SPX, or just a little, maybe just a little short of the SPX 6,000 test. Commodities up again today. Um, this time kind of disregarding the falling dollar and heavily led by precious metals. Copper up 4.5%, silver 2.66, gold 1.39. um, Agricultural commodities moving a little bit higher as well, so some decent moves there. And oil's up on the day, so recovered back to the 72 a barrel mark, despite a larger supply. ES and Q up, Dow and Russell not doing much today. So, I mean, largely this move up higher is presumed to be on the back of inflation with an expectation for higher rates. We do have a little softening in yields and the dollar today. Obviously, Powell was dovish. But even in the medium term, I think we will continue to see rates push higher, regardless. And Powell's cut isn't going to have like a long term positive effect. But yields actually falling is kind of bullish. The dollar and yields start to act as a headwind to continued upside as they represent tightening financial conditions, once they reach a certain point. And so having those fall back a little, you know, might lead to softer price action, but also open up more room to the upside for a further move later on. And yields still, relatively over the last 3 days, 4 days at the same level. So not really significant changes there. Correlation continued, well, not down really, but it's just kind of flat over the course of the day. It did have a little bit of a breakdown earlier, but not much. Leverage in the short end of the carry trade still staying just under 7x. And then the top end pulled back like point 0.3 roughly, a point 0.2. So not too much leverage shed despite the big drop in the dollar and the bounce back in the yen. Um, the forward yield on volatility at negative 2.44%. Something interesting there is that's not coming down steadily. That should be falling a lot faster relative to what we're seeing in the VIX. And so, I mean, there's definitely still a demand for long vol out of bond portfolios that is keeping that elevated. A drop in bond volatility, however, coinciding with the continued move down in correlation. Those are now tracking together. Skews not doing much. 60.63% of the S&P above its 20-day moving average, and correlation between VIX, cash VIX, continuing to nosedive today after bouncing back a little bit yesterday. Although I don't think we're seeing the kind of drops in correlation that we saw back when massive volatility shorting was going on. So even though we're coming down here, and kind of mean reverting back to that $15 mark where this all kicked off from, it will probably be difficult for us to fall much lower than that because the expected returns on volatility over the longer time frames are still slightly higher. Fed fund futures now pricing in half a point of cuts for June of 2025. No real change there, even after the FOMC decision. Um, and the 10 2-year moved a little bit towards inversion today, but not much. Drop back from what? Is that prior to the Fed meeting? Yeah, prior to the Fed meeting, we're around 20, positive 20 point spread, now positive 13. Yeah, that's about it. The finance sector got hit pretty hard today, but tech pulled ahead. We saw pullbacks in producer manufacturing, finance, consumer services, commercial services. Energy didn't do too well despite um, oil doing pretty well. Consumer durables and health services are up a little bit. Health technology is kind of a mixed bag. Transportation down pretty hard. Communications also, so telecom's not doing too great. But yeah, I mean, this is largely where tech can kind of continue to rise and counterbalance that gain in SPX. But SPX is probably gonna still have a hard time moving higher. I mean, we're getting really close to maxing out the amount of leverage available in the system, given the amount of money available. Thanks for this 50/70C. A debit spread 70/75, legged into a fly with a bear call for almost 3x. Nice. Which upper trend from 29 and the .com are we hitting? It's out here on the, well, you can look at it on the weekly or the monthly. There is a trend line that goes from the peak of 1929. We just tested it back in 2000 during the .com bubble. And we came kind of close to testing it again at the peak of 2021, and we're about $30 away from it right now. About $50 away from it right now. But currently, I mean, we are testing the top of the July 23 trend. So, I mean, we could fail there. These are, I mean, they're really only relevant for risk management. They're just technical levels. They don't really tell you anything about future price action. But it's good to know where the risk levels are at. Like a breakout there would be bullish, obviously. Or, at least you would use that as risk for a bullish position. Upstart moving after hours. Do they have earnings today? Yes. Fuck. I'd be careful post earnings. There's a lot of vol to short there. So yeah, NQ never got a pullback. What do you mean? Like today? Did you expect one? Kind of, really? Uh, I don't know. I figured we would just push up into VN into the Fed meeting, and then if it wasn't bearish, we would just stay there. Or Bulls did try to push higher. They just didn't get anywhere with it. I mean, I think as rates start to rise again, we'll probably see IWM pull back. Yeah. How long on Reddit Vegas squeeze? I mean, I if you're trying to short the vol or you're trying to short it, I would make sure that you have plenty of time. Like it's not an invalid position or anything like that. It will likely revert back, but you're gonna want theta because what's gonna happen, right, is as Reddit's price falls, the short call positions that are below spot and underwater are going to close, and that'll bounce the price back up, right, up that massive ramp of Gamma and Vega, and then they'll sell calls out of the money. And this process can repeat several times before it actually falls back below GM. So I mean, Be careful with it, or just you can wait. I mean, if you want to. Um, it's very near its second possible top. I would say. Well, I have last night's data, but like 132, 134 is about as high as it goes before gamma starts to fall off again. And the downside, like below 128, is very steep. So I sold some 30s today. I have some 25s sold, which I rolled out a little further. I've got about 30 days on the 30s and about 40 days on the 25s. Anyway, that's about it for today. I will see you guys tomorrow for 0 DTE day. That should be fun. Later, everyone.